How many of you really consider yourself a value investor, or more predisposed into value investing? How many of you sort of know for sure you're going to be in kind of asset management business? So roughly the same number of people who really want to be in asset management business, who sort of already consider yourself as a value investor. So who can really tell me what are the one or two things that really sort of defines a value investor from everybody else? Anybody? Yes, Chase.
One of the things that I think about is that usually their performance depends on the underlying performance of the business,
right,
rather than, for instance, multiple expansion, trading in or out of the stock based on sentiment. So for that reason, they have to have a longer term time horizon.
So in other words, you think that you sort of feel yourself as more of an owner of a business in a sense, and therefore your fortune rises up and down with the nature of the business and how it. Things to add, please. Yeah, you sort of you demand a margin of safety in a sense. Anybody else?
But you're not buying quarter to quarter; you have more long-term view.
Right. 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 Well, that's pretty summarized. That there are basically three attitudes straight out of the teachings of Ben Graham. That A, you think yourself as basically not a paper shuffler in the sense you really think yourself as owner of the business, and B, you sort of you demand a huge margin of safety when approaching investment, and C, that somehow you sort of think everybody else is different. So this is where the Mr. Market analogy come in. These are three things actually kind of they all come into really coming from one perception, which is is you think yourself as an owner of business rather than kind of a kind of owner of a piece of a paper, and you own a small piece, and therefore you really don't control the business, and therefore sort of is almost self-defense to demand a large margin of safety, because whatever value you perceive may not be there because you can't control it. And then because you thought you're really owning a business, and therefore you really don't care, if you're owner of business, you don't trade that all the time. And so therefore you think that you're somewhat different from just about everybody else in the market participant. But then the question is, if you really feel you're owner of business, why do you want to be the stock market? The stock market is not created for this type of a people, is that right? The stock market is fractionalized so that everybody can go in and go out. Is that right? Anybody have a view on that one? Who can tell me that asset you think is really kind of managed by value investors? Anybody have any guess? With that kind of a perception we just talked about? There's no real study, but there are a number of attempts of a study, including one actually by a professor next door at the law school, Lowenstein, yeah, and which really kind of put it at roughly under 5% of all assets. That actually is consistent from what we just talked about it. Now, you are really not the majority. You are actually a very, very minority. And the stock market is really not created for you. It's created for the 95% of all the other people. And that's really where your opportunity is. And that's where your challenge is. So to understand that before going into management business is really extraordinarily important. And that's really that's what I first learned when I came here and listened to Buffett. That's one thing that stick in my mind. And that really sort of helped me to position where I am, because I really know by then what kind of a person I am. I think most of your challenge, especially those of you who really want to end up in the management business, and I'm actually tonight primarily addressed to that group of people. Sorry for those people that are not. Your biggest challenge is really to understand whether you're that 5% of the people or you're the 95% of the majority. And you might think that because of the training, because you do this, you sort of intellectually or theoretically biased towards that small minority group of people, you'll be amazed, how much it would change. My career is sort of take a little twist as well. I always kind of run my own fund. Part of the time when Bruce sort of mentioned was Julian was really sort of when he invited me to really share office with him, because he sort of invited a whole bunch of fund managers that he invested in, and also share ideas. And that's when I sort of get a much better understanding of how the 95% of other people really operated. And it is tempting because, why 95% of the people don't do, what you guys are here try to do, despite the spectacular success of Warren Buffett and Charlie Munger. Why is that? Anybody have a reason? Why is that? Why there's only, yes?
Emotionally, it's very difficult.
Yeah, emotionally it's very difficult. But if you think of that, it's very convincing that value investors over a long period of time really have much, much better kind of returns. You think that's where the money is, even if it's emotionally difficult, you think they wouldn't change it? Any other reason?
Well, people are measured by short-term.
Right.
Actually, to that point.
Right. We actually are very close to the point. I think that the real answer is that's really where the money is. Why that's where the money is? Because the market is really created for those kind of people who are really thinking of trading in and out all the time, and therefore that they will pay attention to the short term. And therefore that if you put up with that requirement, that's really where the asset is going to find you. And so as a result, that statistic, despite the huge discrepancy of a performance of that 5% have a spectacular return consistently over a long period of time, 95% of the money or something close to that probably would always reside to somewhere else. And if that's where the money is, most of the people naturally would end up there. So my first kind of a point I want to leave with you is really to understand who you are, because you will be tested through all this period of time through your future career development, that you're going to really have to really face to ask yourself whether you're a value investor or you're not a value investor.